Good morning, Christian.
Good morning.
How are you?
Oh, you know,
Yeah,
hanging in there.
I hear you.
Morning, everybody.
Good morning. Well, I guess I'll wait a minute longer. Oh no, it's 8:31. So I wanted to kick off the discussion by reiterating why Gabe gone over this many times, but walking it through with our our legal representatives because we were finalizing the termination of the contract. And the argument is just really, really compelling. It's, especially when, I explained it to someone who's in a different discipline, who's not necessarily a music person. And they totally got the business argument. And I think that it's really worthwhile understanding how we got where we got and why it was still a really, really important step. So, without further ado, first of all, can people hear me?
Yeah, for sure.
Yeah, you're a little fading in and out in that computer voice, but it's pretty good.
Okay, all right, cool. Just gonna adjust the mic just a little bit. Okay, hopefully that's good.
That just got way better, Greg.
Yeah, 1,000 times better.
Okay, cool. So essentially, once I started looking at blockchain in around end of 2014, it became clear to me from talking to many venture firms that traditional VCs were not going to fund platform level blockchain stuff until they saw that there was a real application that could be profitable sitting on top of the blockchain, which was, and that was continued up through the end of 2016. And this was not just me. When we reached out to Martin Davis and David Otto and Otto Capital, they felt very confident that they would be able to get investment for a platform level play. And they also hit roadblock after roadblock after roadblock for the traditional VCs, all of which gave the same feedback. We want to see a compelling application on top of the blockchain that actually has customers. This was the rationale for RSong Holdings, which became Pythia, and also the rationale for Reflective. We needed a two-pronged strategy that was application and platform at the same time. So I just want people to understand that the traditional VC money, the institutional money, won't come into the blockchain space at the platform level. By and large, I mean, there are a few outlier cases, but by and large, they won't come in unless there's a compelling application. And so whatever money you get, ultimately, if you're going to get out to scale, you're going to have to go after institutional money. So to be prepared for the next step in the process, you have to be able to demonstrate revenue generating applications. And then, you know, I've done the analysis about all the other sources of funding and how to approach them and what that means. But this is the most important thing, is just understanding that you have to have revenue generating applications before you're going to open up the door to institutional capital. So once you do that, there's the in principle analysis, and then there's the on the ground analysis. So the in principle analysis is very, very straightforward. How do you build an application that's going to provide, or a suite of applications that's going to provide the kind of economic scale necessitated by proof of stake that minimizes the marketing spend or user acquisition spend to get the application into mainstream usage, so that people understand the again, other pieces of the argument. It is necessary. It is necessary that the transaction volumes for proof of stake be much greater. And this is because you can't do block rewards for proof of stake. Block rewards equal free money for the validators and constitute a significant security hole or attack for the network. Now, there's a little bit of wiggle room there, but by and large, block rewards in the proof of stake setting, unlike the proof of work setting, encourage validators to post junk transactions to the network in order to get block rewards. And that's just not a secure network. So you have to minimize the block reward idea and make the economics come from the transaction fees. And what that means is that you must have much lower transaction fees and much greater transaction volumes. It's just entirely a scale play. It's all about, you know, it's like the telephone company. You know, it's all about really lots of little tiny transaction fees. That's what the proof of stake economics are. So you have to have large scale transactions. And so you need applications that are going to generate large scale applications. Hopefully this is all making sense. So the next, because there are a lot of pieces in this argument, but you know, it's like a mathematical proof of a certain level of complexity. You have to have all these pieces together in order to understand how things actually play out. So once you know that you have to have revenue generating applications to unlock institutional money, and you know that those applications have to generate high volume of transactions, the next thing you want to do is to minimize your marketing spend. So in terms of the ambient setting, we learned a lot about these kinds of markets from the whole development of the World Wide Web. All of Web 2.0 applications taught us it's all about digital assets, digital assets, digital assets. That's been the like 90% of the Web 2.0 kinds of applications, digital assets. You know, there's a dark side to this, call it surveillance capitalism, call it what you will, but at the end of the day, the vast majority of those markets that grew were the digital assets. And then so once you recognize that that's sort of what Web 2.0 taught us, you can go look at it from the other direction. You can say, well, you know, where are the markets that have high risk, even if they do have transaction volume? You know, a really good example of this is the financial markets. Any kind of trading where you could potentially put lots and lots of dollars at risk on an alpha platform for a bug you just didn't see, that would constitute some significant risk. You could, for certain kinds of financial markets, you could be, one bug could get you knocked out of the market for 5 years, which would be disastrous, especially for, you know, a young company like RSong. So on the one hand, it's clear that digital assets is still very much the name of the game. On the other hand, it's also clear that anything that has to do with life and limb, such as supply chain management, or anything that has other kinds of high risk factors, such as financials, are they're super risky and not nearly as economically viable as some of these other digital asset markets. So that gets you now to high volume, low risk markets. And they're fairly easy to identify. Of those markets, if we keep in mind the desire to minimize the user acquisition spend, how much money has to be spent per user on an, let's say, an annual basis to bring the user to the platform and keep them on the platform long enough to get, you know, some traction. That's an important number, and we have at this point we have tons and tons and tons of data about that kind of number. So I've said this many times, but people need to be aware that the user acquisition spend for WhatsApp was about $19 per head. Facebook, it's about $50 per head, or at least it was at one point. So you have to understand, so to get to 100 million, to get to a million users at $50 per head, you're talking $50 million. At $19 per head, that's still $20 million, right? That's a lot of money, and not money that we have. But I can tell you this, in the summer of 2016, I looked David Otto in the eye and I quoted these numbers to him. So, and the reason the timing is important is because I want people to understand that I've had this plan mapped out since 2019. So in the summer of 2016, I quoted these numbers to him and I said, what if we could bring the user acquisition spend down to a tenth of what WhatsApp and Facebook spent? Because they didn't just grow to 1 million users, right? They grew to hundreds of millions of users, which means their user acquisition spend was enormous. It was more than hundreds of millions of dollars. And I said, what if we could bring it down to a tenth of that? Because I had a plan. And the plan was based upon the idea that social networks must be seeded, that all of these applications end up being social networks, and they have to be seeded by a group of influencers, and that the best influencers were the artists, and in particular, of all the artists, the best influencers are the musicians. That was an insight that I had, and it's borne out by the data. I've used the example of Taylor Swift and her comments about participating in democracy and how that generated 65,000 people registering to vote just last November. This to me is a really, really poignant example of what we're talking about in terms of the influence that musicians have on their audiences. What that means then, and I've given these numbers before, but it's really, really important, that if you go after the right 100 musicians, if their audience is only 1 million deep, and that's certainly a gross underestimate of Taylor Swift's audience. But if you go after the right 100 musicians, and there's not too much overlap in their audiences, that's 100 million users. If you if those users conservatively only listen to 10 songs a month, which is far less than what you see on average on Spotify, that's 1 billion transactions per month conservatively. So that's the right transaction volumes. Now, all of that would be true potentially of a blockchain enabled reporting and accounting solution for musicians. They would be potentially motivated because of the savings and the direct relationship with their audience and the automated payment cycle and the reduced payment cycle and all of that. That would all be interesting, but you still have to go court those artists. Now, if you think about what's going on with respect to those artists and no other special audio technology, a musician like Taylor Swift will then be motivated to release on a blockchain-based solution, as well as Spotify, as well as Pandora, whatever the other venues are, right? And that's normal and should be encouraged. If, however, you had an audio technology that delivered something that the musician valued and treasured, that was unique and special to the musician, then that changes everything. Because at that point, if, for example, if Taylor Swift creates a new song and she releases it on RSong and she releases it on Spotify and all kinds of other offerings, then there's still considerable marketing spend to bring users to the RSong platform, right? Because RSong has to differentiate itself from Spotify and all these other platforms. If, however, RSong has a new audio experience that can't be gotten anywhere else, at least for the next, X years, then everything changes. Because Taylor Swift is excited about her new song, and the fact that it is, it has this immersive or special audio experience, and it can't be gotten anywhere else. So when she releases that song, our chain and RSong don't have to spend any marketing dollars. Nothing. Not a dime. Because Taylor Swift, promoting her own work, says, I really want you to go listen to this new song. This is the only place you can hear it. And it's not because RSong, had an exclusive deal or ultimately that couldn't be heard anywhere else, but the industry lead is such that it would be the only place. And so the only marketing spend that our chain or RSong would have to do would be to bring Taylor Swift to the immersion labs. And once she heard it, and we tested this hypothesis on many, many, many musicians, everyone to a person, as soon as they experienced it, they were like, oh my God, this is the next generation in audio. So then, even at $10 million, the balance against the marketing spend of over $1 billion is completely justified. It's one of the best deals you could possibly make because it gets you a path to mainstream that is cheaper than all the other demonstrated paths to mainstream for digital assets. So that's why the RSong arrangement was the way it was. Now you could say, Greg, how could you possibly know that there was going to be some technology like this that would be specific to the audio in 2016? So I knew that we would be able to reach out to the artists and get them on board. And I took a bet in 2016 that we would be able to have something that was special for them. That was my gamble, and it showed up in the summer of 2018. And I was like, whoa, right on time, right on schedule, usual Archain magic. Here it is. This is the thing that we needed in order to drive the marketing spend down to less than a tenth, in fact, 100th of what these other applications have had to spend in order to get to mainstream. So that's the argument. So let me just stop there. And I just want to check in and see if people understand what the strategy has been and what the argument was for the whole thing.
I'm just curious on why you had mentioned the audio experience thing after the immersion thing is not happening anymore.
What I'm trying to do is to get people to understand, in retrospect, what this is all about, and
Yes.
why. Because the argument still stands,
Yes, okay.
right? And for
Mhm.
example, if RSong went to some sugar daddy or sugar mama and said, look, we believe this argument is still valid. Do you want to help us raise enough money that we can complete this vision? It's still a valid argument.
Yeah, I completely agree.
But the important thing is, what I experienced over the last several months is that apparently the argument has so many steps in it that not everyone understands the argument. Like even people, very, very smart people who have had experience in the music industry don't understand how all the pieces fit together. So I'm curious, in this group, how do you understand the argument? I'd love to hear someone kind of boil it down in terms of their understanding.
So I don't agree with the argument.
Awesome. So I'd love to hear this.
Yeah, and I'll tell you why. And there's a few reasons. One, we're a blockchain company, and adoption, while we need to market and promote, absolutely. We're not. I don't think the co-op should be the ones building dApps on the platform. And instead, we should be. And right, this was the original part of the original idea of the solutions group. We should be promoting others building dApps on the platform.
Can I stop you there?
Sure.
I didn't make organizational assignments of the pieces that have to be done. I just talked about the pieces that had to be done.
But you did implement it by signing that immersion deal. And
I implement because at that point, neither Reflective nor Pythia were in a position financially to be able to take it forward.
Well, we had 20 plus portfolio companies who had projections of transactions, and
no, actually, they didn't have projections of transactions until I asked them in October.
Yeah, but then we got it,
and it was well below the back of the envelope projection. Like by second year, so it was as if the reflective people had never understood the very argument I just gave you.
But Greg, I just don't agree. So to get those kind of that scale and to find that person when that deal has constrained us so much economically.
That's a post facto argument.
Well,
I'm
you knew it at the time you signed the deal that it was going to curtail many other financial.
Oh no, that's also not the case. We did not know that. We did not know that the market was going that in a few months the market was going to lose 70% of its value. No, we did not know that.
You told me that my second day here that the solution group can't be funded now until we get ingestion of additional capital.
Okay, I'm not gonna argue on that point because it's just but what we did not know and you didn't address at the time we signed the deal, which was in July of 2018.
Right.
No one knew that the market was going to lose 70% of its value.
Okay. I mean, that's a whole different argument.
No, that's exactly it, because we did not know that our treasury would be decimated.
Well, if we
it could have gone the other way. It could have gone the other way, Ned. The treasury, like Bitcoin could have popped back up to 20,000, right? At which point our treasury would have been really quite full, and we could have carried this through.
Perhaps, but if we had taken fiduciary responsibility, we would have moved 80% of our holdings into cash and not left it on crypto, which is known to be volatile. Because you're right, nobody can predict it. And then we would have had a pile of cash to do all the work we wanted to do.
So I take exception with that language. So the board made a decision in the beginning, the end of 2017, that mid 2017, that the right distribution was 1/3, 1/3, 1/3 across the two major crypto and cash. That was the board's decision, and they felt that was the responsible thing to do. And at least up through the spring of 2018, that looked like a reasonable position. That looked like a responsible position.
Okay, I wasn't a member of the co-op at that point, and I think it was, and I'm not blaming you personally, I'm saying the board made that decision. It was absolutely the wrong decision to make, and it proves that they just are not financial wizards. And and that's hindsight. Okay. So
yeah, that's my point. That's hindsight. What I'm talking about is what you need to do is to argue that you can make the transaction volumes for less spend. That's the argument, and that's what I was hoping you would get down to, right? So if you're gonna argue about this, like there's no argument on the math of the economics of proof of stake. Because if you don't reach transaction volumes, it's not financially interesting.
Okay.
It's not economically interesting.
Okay.
So I'm not going to argue on that point.
I'd like to chime in. I just want to chime in and just say one thing, because the exercise around building out RSong, at the foundation of it all was, we've got this license sitting in the cupboard. We have a couple of pieces of technology. Let's build something that can generate transaction volume. And for all of my research in the space, there's a couple of things that I'm pretty damn clear on. Number one, nobody has achieved anything that has real transaction volume when it comes to a dApp. Number two, what is going to allow whoever gets to build the dApp that keeps the blockchain in the background is going to be the one that wins. Because one of the primary reasons that so many dApps have not made it, or they're people haven't embraced it yet, is because there's too much tech for the average user to move through and understand how to use it. And at the end of the day, whether we've got the biggest bands in America or Middle East or Latin, wherever they're from, at the end of the day, the interface, the UX UI experience has just got to be so damn easy that anyone can figure it out. And it has nothing to do for the user to be thinking this is on blockchain. All it is just a dApp that has some more superpowers. And if we're able, if whoever can build that wins. That was ultimately what we were trying to do with the build for RSong.
And Greg, I want to get back about your calculations. I think the problem with your calculation, so your calculations would have had a lot more credence if you already had a major artist who was signed on the platform bringing their 10 million fan base. But without that, your calculation was still theoretical. It was like, if we build it, they will come, as opposed to we're building it because one person has already come. And so it you know, projecting out how many transactions you were assuming we could get because of the strategy was still hypothetical.
No. That's an argumentation fallacy. So,
Greg, hold on, Greg. You could poo-poo every idea I have, but you know, I've been in business for many, many years, and I really, you should find a different way than degrading the statements that I make. And if you don't agree with it, that's fine, but don't tell me it's a fallacious argument. Because the point of the fact is we have no major artist signed up who is bringing their fan base, and we have nobody interested of all the people we've talked to who today want to bring their fan base. So while it may be a hypothesis, it hasn't been proven out by any practical implementation yet.
I think one way of kind of demonstrating that there is some soundness to Greg's philosophy there is to examine the very artist he's talking about, Taylor Swift. There's a process that people have been using with streaming services called windowing, where an artist will window a release on a particular streaming service because they're going to make more money from that streaming service. Taylor Swift did that with Apple Music back when it was iTunes. So she windowed her, was it second or third last release on iTunes, cleaned up, made tons of money, and then she released her product on the other mainstream services. It's very practical to imagine that someone like that would want to window on a service like ours because the payouts would be much higher. So it's quite a rational way of thinking. I don't think it's that particularly out there. I think it's actually a wise everything's speculation, right? But we want to speculate based on the data that we have, and I think there's enough data to show that Greg's theory was accurate.
But it hasn't been
and also,
accurate. But
hang on, wait a second.
There's no artist that's come and done that with us, but yet we spent all that money, which has hampered us not only financially, but also in the entropy of all the public statements in our co-op among our membership. So,
okay. But that's a second. But again, that's post facto. What we're trying to do is to look at the argument relative to other strategies, which are necessarily, since they're strategies, they're future facing, they're forward facing, and they are decision making processes. Now, again, I want to take your argument to task because I haven't approached any of these musicians. I was waiting for the right time. And part of waiting for the right time had everything to do with our partners, Immersion.
Well, maybe we should have waited for the right time before we spent all the money.
No, no, you don't get to do that, right? You have to have you have to build it out before you can approach the artists, right? At least to a certain point.
Well, it was a gamble and it hasn't paid off. I mean, so, and is that gonna?
Oh no, but that's also what you're saying is you don't bet on things that are not certain. That sounds like the venture community, which means, you know, I don't want them to participate in any of the reward if they don't take any risk.
Greg, come on. I mean, we shot our load on that Immersion deal. It didn't pan out.
No, we didn't. That's also a mistake. Most of what happened in terms of our loss was not Immersion. Most of what happened in terms of our loss was the decimation of the crypto market.
So we didn't give them multiple, I don't know what I'm allowed to say, but we didn't give them multiple millions of dollars.
I'm sorry, but you don't get to say we shot our load because that wasn't all of our load. Our load was decimated by the crypto winter.
So it was like a perfect storm. It was a combination of factors, that being
That's correct. So you don't get to have both. You don't get to say it's all of one thing when it wasn't all of one thing.
I didn't say it was all of one thing.
You just said we shot our load. That's
Well,
what that means.
Okay, so, okay, I'm not going, Greg, also, the fact that we're having this kind of discussion is such entropy for doing the work at hand to moving forward. And we've been having these conversations ever since RSong was rolled out in Berlin.
No. The important thing here is there another argument that reduces the go-to-market spend? And if there isn't a better argument, then you can take this argument to particular funding sources, which I have identified for RSong, and reuse this argument, but now with lots and lots of experience.
But okay.
Right. So in particular, I'm looking at Nora and I'm looking at Fabian, who have connections within the music industry. And if they do understand the argument and it makes sense to them, then in terms of informing their approach to particular individuals as a part of fundraising, the question is this argument worthwhile to have in the arsenal of pitch? If it is, great. If it isn't, that's also great. Good information. But as near as I can tell, the argument is not dead at all. And most of the critique, like if you had come forward with critiques that said, oh, actually, here's a better way to do marketing spend, here's a less risky way, blah, 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 I would have loved to hear those. But so far, it's all been post facto argumentation. They're all contingent.
I told, when I joined and I sent you my business plan of the solutions group that was going to generate lots of money with the existing clientele, that was my argument against this and for that, because I do believe to grow the play. Listen, life has taught me one thing: nothing is free, and you can't really get anything of value on the cheap. Now, it doesn't mean you have to spend, 3x to get something, but it just means you have to pay to get stuff of value, and that's the way it is. And if we had taken the original approach, was to build a community of Rolang developers, to build a community of companies and startups that wanted to build on our platform, to promote, evangelize how great our technology is, and we had put the time and money and effort into that, we'd be much further along than we are now.
Yes, I agree with you 100%, except for the fact that if I now apply your argumentation style and do a post facto analysis, not a single one of those companies made it.
That's because
that it doesn't matter so much for that strategy too.
No, I wouldn't put it that way.
Can I jump in
please,
here?
Please.
Okay. So in the chat, Fabian, I can't see your picture. I'm not sure if anybody else can see the picture. But Greg, I just wanted to summarize what you said in the beginning. Mm-hmm. I think.
Yes.
It's all about the low risk transactions and the low spend per user in a genre or in a market in which marketing is easy. And then you're saying it's maybe not easy, but musicians are the best at marketing of the entertainers. And you're saying basically like those three kind of things make this type of an app really ideal for transaction volume for the network. Is that what you're saying?
That's yes. I would make another statement to kind of emphasize what you just said. Personally, I don't know how to sell to 100 million people, but I know from life experience that I can make successful sales to 100 people.
Right. And so that was actually my follow-up question. So basically, like, you brought up me and Fabian. It's true that we know a lot of people in the industry, and sounds like Steve Ross Talbot. He has some connections over in the UK, which I'm not sure how extensive they are, but he seems to be really interested in wanting to help us with this, which is why, we've been teaming up and having these calls and everything, which I think is great. The only thing is that I'm curious about, like, when you say that, you know, we can get 100 different artists and they can bring all these different people, like, if you do a post on Facebook, even if you're a huge artist with, you know, millions of fans, a very small portion of your fans are going to see that post. And so I agree with you that I think the way is to get a smaller number of people to sell um, to their fan bases. You know, I think that's definitely the way to do it. But I'm not sure if the way that you described just the numbers just now, that like we can get 1 billion transactions from, I can't remember exactly what you said, just because there's no way to get, like, you know, 100% of an artist's audience to come. I don't even know if there's a way to get 10% or 1%, because people, just because Taylor is like putting her song out there. I mean, I know if you're saying like, yeah, if it's an exclusive thing, or maybe not even if it's an exclusive thing, but if she just puts it on RSong just for her own reasoning, either for the immersion thing, if we get that back, or for a different reason, then that could be a different story, and people might use it like maybe once, like they might come to RSong once, or more than once. I'm not sure. Maybe they'll find some other artists that they like and they'll keep coming back, and hopefully like they enjoy using the app and they'll keep coming back. But I just don't know, like, my biggest question about the whole, I guess, presentation, we'll call it, that you said in the beginning, was just that I don't know a way to get somebody to announce something and then to get such a big portion of their audience to do whatever it is that they want them to do, like whether that's use an app or buy a ticket.
I so love, no, this is the kind of argumentation I love. This is great, and this is exactly the kind of thing that I would love to have a conversation about, right? So this is, yeah, no, this is right on target, spot on, and it's from your life experience. Like you know this, having done lots and lots of fundraising campaigns. You kind of, you've had this experience exactly. So I
would say I've had this experience.
Yeah, exactly. So it's not just that it's a rational argument, it's an experience-based rational argument, which is the best kind in my experience. So let's take a look at the way I did the numbers. I said 100 artists, 1 million audience each, not too much overlap in each of their audiences. Now, in point of fact, those are just scaffolding. So in order to make it really work, you don't just do 100 artists, you do 10x that. And so that's 1,000 artists. And then you make sure that more than 10 of them have more than 10x just the 1 million fans. So now you've got a spread, so that even if you were to take a 10% success rate, that still gets you 100 million users. And then even if they only listen to 10 songs, and that's why you have this spread of artists in 1 month, then that's still, since you have 100 million users, 10 times 100 million is 1 billion.
Yeah.
Right?
Yep.
So the point is, you do these super conservative numbers.
Got it.
And basically it tells you what your spread is. But then you raise a really important point. Will they come back? Just because they listen to 10 songs in that month, will they come back to month 2? And that's super important, and I really agree with you. Now that's where I think it's all about the network effects and the feedback loops. Right? So most of what's going on in music and digital life today is all about social validation. I hate to say it, I'm not trying to be cynical, but that's really what it is, right? People listen they listen to bit rates that are just terrific on these, like $250 headphones, right? And there's no way to explain that until you go, oh, this is about lifestyle. This is about, proving status and connecting with peer groups and all that kind of stuff. And at that
Mhm.
point, you understand it. So when the word gets out that there are all these high profile artists who are on this brand new platform, and then as Fabian said, it's just a platform with superpowers. We don't know how or why it's great. We just know it's great, right?
Mhm.
That's when you start having the network effects. And if someone like the quote failing New York Times quote runs a story about this brand new platform with superpowers that has attracted all these artists and had 1 billion transactions on it, then that gets the attention of other people, and there's a second wave and so on.
Greg, this all sounds well and good, but until you can prove your hypothesis by signing at least the first artist, it's really just it's just a hypothesis.
Yeah,
And,
I actually.
and this is what, you poo-pooed everything I said because I'm challenging you that your basic assumption is flawed. And if you want to prove me wrong, then go out and sign that first artist. Bring us that first artist. We've been talking to artists left and right, and so far, nobody, big or small, is ready to join the platform. So all of this is really hypothetical until we get those 10 artists.
Yeah.
Okay, so
Let me chime in for a second. So
please do.
I pasted an image of one of the artists that I've been speaking with, who has a billboard hanging in over in Times Square regarding the release of their new single. You can all see the image there. I'm not going to speak about their name because we're being recorded. And I've mentioned this artist for months because
I cannot see an image, so I don't know who it is.
Does everyone else see the image?
I see it, Nora. You have to click and download the screenshot, and then Zoom will let you open it up.
Yeah. Unless you're on your iPhone, which might be a different situation.
Maybe.
Okay, sorry. Keep going. Sorry.
Anyway, so there's an image there. Clearly, the artist has a significant reach. I'm going to paste in here a link to the very beginnings of what we were looking at for being the RSong artist reach. And this artist is listed here as one of the artists that we were going to go after, that we believe has, per a few months ago, has approximately a reach of 5 million people. All right, that's pretty significant across their various social media platforms and such. Now, I had lunch with the manager for this artist, a month ago, 6 weeks ago, something like that, before I got sick. And I showed them what we had developed for the MVP. I showed them the UX UI slide. They're like, "This is great. Let me know when it's completely done, and then we could talk, and you could present this to my entire team, so we could bring the roster on there." And we talked about unreleased tracks, remixes, all sorts of things that aren't yet released. The possibility of having the first single released. He asked, "How's the money going to work if I give you an exclusive single for a month?" I said, "We're working on the economics of it." And I talked to him about, everything that we've been talking about, rewards, and, the more people listen to you on one specific day to that single, the lion's share of the money goes to that particular artist. I laid it down, and they're like, "This is fantastic. Love it. Let me know when it is ready." And this goes all the way across the entire spectrum, from the super indie artist to the artist who has their picture and the release of their single hanging up in Times Square. Nobody, per my conversations, is ready to do anything with us yet until, it makes sense, until the car is ready to drive out of the shop. So that's essentially where we're at. And until we can actually get to that point, that's all we are in right now. The way I feel is that we're in a holding pattern until we can get there. And we get the finances that we need in order to be able to build this up to the point where we can now start inviting people into the house and to start, doing work with us. And to add to it, not only on a technological level is clearly we need to get that done, but number two, on a legal level, there's a whole world of legal language that we need to implement onto the platform, so it is legal for us to do this and to take on people's IP and monetize it. So that's my contribution for all that I'm hearing here.
So I love that, and it connects with what Ned was saying, which was, bring in an artist. So that's a nice piece of argumentation, because it's the usual thing that a startup has to face, which is the kind of Gordian knot. I don't want to take the risk to use your platform or to engage your platform until it's completely done. But if you don't find someone to take that risk, you can't get enough resources to get it done. So that's just bog standard startup hell, right? Everybody has to face this particular Gordian knot, and you have to find a way to cut that knot. Now, there's another aspect of Ned's critique that that is methodological that I do want to address right away. Ned, I'm not poo-pooing your arguments. I'm challenging them in the same way that you're challenging me. So I think of this dialogue, even though that there's conflict, as super healthy. So if there's something in my attitude that is conveying that I don't value your comments, quite the contrary, I do value your comments quite a bit. I'm simply challenging the argumentation, about, it's like, so how do we argue? Right now, I'm less interested in post facto argumentation than I am interested in like the kind of argumentation that Nora brought up, or the kind of argumentation that Baby had brought up, because both of those are, challenges to the strategic part of the argument, as opposed to, well, what happened, and then trying to figure out whether what happened was a flaw in the argument or some contingency.
Okay, I get that. I mean, to me, the strategy, looking back it's like a retrospective in software development.
Sure.
And it's needed so we don't repeat those mistakes going forward.
Yeah, but what you have to do is you have to separate signal from noise, right? And my argument, at least with respect to a lot of the retrospective part, is that there's too much noise, not enough signal to be able to get good stuff out of there. But we can do that analysis with respect to Fabian's point of view. Here's my feeling, Fabian, and this is now based on, like before I started our chain, right? I was still doing scenario. I was actually doing splicious and then scenario.
Delicious. That's a new one for me.
Yeah, no. So like here, anyway, the main point is that I have been to the institutional monies, right? I've spoken to them, ad nauseum. They won't put money in until there's a DApp already generating revenue. So unless there's a customer, they're not going to put money in. End of story. So we have to have customers before we can go to the institutional folks, right? We have to sign an artist before we can get to an institutional investment. So if the artist is saying, well, I'm not going to sign until you have institutional investment, that's a catch-22. And so then we're going to have to figure out how to break that. Now, in my opinion, the institutional investors are not risk takers. I've watched this community. It used to be like in the early 2000s, institutional investors were much more risk taking, and then Web 2.0 happened, and that was the end of it. They felt that that they could have all these metrics. But what really happened, and again, this is just my opinion, and it's a broad scale, broad strokes kind of opinion, so take it with a grain of salt. My opinion is they got too bloody scared, and they only want to put money in if there's no risk. They're only putting money in if the model has already been proven, and the only risk you're taking is how to take it to scale. And that's not good for business, in my opinion. So of the two parties that have to give, I don't think you can bend the institutional investors. However, I do believe that there are still a few George Harrisons out there in artist land who will look at the script for Monty Python's Life of Brian and go, because it's just a script, right? It's not a movie. They don't have the movie in front of them, right? And they say, I want to see this movie. Of the two possibilities to break the Gordian knot, or to break this catch-22 cycle, you're going to have one of them has to give, right? So is it the institutional investor or is it the artist? My opinion currently is it's the artist. And so we have to keep searching and looking for the artists or the community that surrounds the arts and entertainment to get them to take a risk, where they read the script. Because what we've got with respect to RSong is a script, right? But we don't have the movie, and we want them to invest in the movie so they can watch it, so they can see it happen.
Mm-hmm.
And I think that's, to me, that's the strategy. But I'm open. I'm here to learn from the wisdom of this crowd.
I would like to just chime in here, if I may. I would like to say that when I was just listening to the beginning of this conversation, it was kind of Greg laying out the rationale for why immersion and why then. And then the conversation kind of moved to like whether it was mistake or other things. But it seems like we're kind of returning to the same place in that, in my opinion, the rationale was sound at the time of the immersion deal. And I agree with Greg that a huge chunk of it, the hindsight is 2020, has to do with the crypto winter that happened. I was around when immersion was first being tossed around. In fact, I was talking with Steve Turnage about it before I think even Peter or Greg had heard about it. And what excited me about it was the aspect that's actually under NDA. The immersive sound aspect of it was less interesting to me than the possibility of provenance that could have occurred with our emerging technologies, which at the time was a trio. It was RChain, Resonate, Immersion. And the idea at the time was that we were going to be able to bring this, coinciding with mainnet, we are going to have a functioning streaming application that would provide all sorts of novel revenue sources for artists that weren't getting it on the mainstream streaming services. So these combined technologies, it made a lot of sense at the time. So I'm just kind of just saying this in Greg's defense that hindsight's 2020. Here we are now, and we're facing that chicken egg problem, and we're all kind of realizing that how are we going to get around this? I kind of like Greg's notion that perhaps we can convince certain passionate, artist-friendly types to perhaps inject some money in this. And the reason why I think it's more possible now than ever is that we're crawling out of the crypto winter. And there already is, I've just read about a new signing 2 or 3 days ago where it was 18 million or something that was being put towards a video streaming company that's going to be built on Ethereum. So there's fresh new excitement in the air for ideas. I would argue that what we need to do now is come up with a really good, solid script, the equivalent of The Life of Brian that would really draw people in, because I don't think we have that.
Well, maybe that's a good place to end it. It's 9:28. We got to jump over to the staff meeting. I really appreciate people's patience with me going over this argumentation. When I had to go through it again with some fresh ears, and I heard it again through fresh ears, I realized, God damn it. This is a really compelling argument, and it still has life. And we should probably use this as a part of being able to pitch to potential funders. But anyway, that's why I wanted to bring it up today.
Awesome.
So thank you, everyone. Daryl, if you have some time today, I'd like to chat with you and get some things completed today.
Awesome. That'd be great.
Awesome. Cool. All right.
See y'all in the staff meeting.
Thanks,
Yeah.
everybody.
Ciao, ciao.
Bye.